I would like to re-welcome Sandra Sohn from Interstech to the stage. She will be moderating a panel with Sebastian Dai from Linklaters, Till Rügge from Hardstocks, Dominique Puiger from Iconic Holding, and Florian Dönert-Breyer from F5 Crypto, and Jonas Jünger von Kyprion. And the topic will be making asset classes accessible with blockchain technology. Looking forward to it. Welcome.
Perfect. Yes, thanks a lot. Really happy to moderate this panel, or this panel discussion about the huge topic, making asset classes accessible with blockchain technology. And I think we can discuss this topic for hours. We will try to do it in 30 minutes. Before we start with an introduction round. So I would just, if you want to start, so.
Yes, great. Hi everybody. I'm Jonas Jünger. I'm the Managing Director of Kyprion. And Sandra, thanks for having me on the panel, and thanks for remembering the introduction session this time. In the preparation, she completely skipped that part. So we are a new custody provider. We focus on institutional clients, and we focus on cryptocurrency. This is where we see the market today. And we recently received our registration from the Austrian FMA, who gave the presentation yesterday in summer, and we hope to launch in the next couple of weeks and months. How we can help making asset classes available as a custodian, I think, is pretty clear. We can help keep them safe and enable institutional investors making those available to retail customers.
All right, I'm Florian Dönert-Breyer. I'm a crypto native. I'm in the crypto space for almost a decade now, and I founded 2 companies. I exited them, and right now I'm the CEO and fund manager of F5 Crypto, and we invest scientifically into crypto assets.
Hi everyone, I'm Dominique Puiger. I'm the head of ETP product management at Iconic. We're basically building ETPs around crypto assets, so pretty much making crypto or digital assets accessible to the traditional investor via an ETP wrapper that has been around for like 15 years in Europe. My background is also ETF ETPs, built the digital asset platform for VanEck, and now doing the same thing for Iconic.
Well, hello everyone. My name is Raphael Hess. Unfortunately, I have to take the spot of my co-founder, Till Rügge. We are 3 co-founders. He's on a sick leave, so I'm replacing him today. I have a background in business informatics. I also used to work at Amazing Blocks, basically a Liechtenstein startup, which worked in the regulatory space. And right now we're launched recently Hardstocks to the world. We are basically offering equity shares to everyone. It's with full prospectus, and I think we will come back to it, how this makes it accessible to everyone.
All right. Last but not least, the token lawyer, no pun intended here. My name is Sebastian. My background is actually in traditional capital markets products. And I recently, which means 2017-18, moved to get involved into the digitization of capital markets products. We have now established at Linklaters a digital assets group, which I'm heading, and I'm happy to say that I'm considered cool in the eyes of my 17-year-old daughter, because finally she seems to understand what I'm doing. Beforehand, it just wasn't possible to have a decent conversation over the dinner table because capital markets, derivatives, repos, sec lending really didn't mean anything to her. But now, Bitcoin made it possible for me to be cool in the eyes of my daughter and her friends.
Amazing, thank you so much. Maybe to start with an open question. So talking about asset classes, many asset classes are limited to institutional investors. Sometimes it's necessary, sometimes maybe not. How or even can the blockchain technology change that? And maybe in what way, and maybe to make it more open? Is it necessary to do that? So maybe Raphael, you are already grabbing the mic, so go ahead.
Yes, I do believe that there is basically an unfairness because there's a lot of opportunities which I cannot invest into. For instance, this could be infrastructure, it could be dreams I cannot fulfill myself because I'm a private person. Or from the other side, institutionals who cannot access certain investment opportunities or assets which have not been accessible before, they are not fungible before, they haven't been emitted. So I think we have a completely new setup which can make things accessible to all groups, all peer groups attached.
And when I understood you correctly, when you introduced yourself, you said you're doing that in Liechtenstein. Liechtenstein law is really specific, so maybe you want to tell us a little bit about that, and maybe then I would throw the ball to Sebastian, who can maybe give us like a short view, what possibilities do we have in Germany or even in Europe. So please.
Well, thank you. Liechtenstein happens to be in the European Economic Area, so the EU prospectus basically terms apply to the whole space. What Liechtenstein else has is the TVTG. It's a certain law which had been brought to the country at like 2020, which they worked on for 5 years. It's actually that avant-gardistic. It has a really new thinking of how a token is supposed to operate. Also the transition in between people, because it's actually like attached to the rights it's defined with. And out of this scope, we have the new opportunity to basically tokenize equity. And equity is something which I think we all know in Germany is still missing, or like also sometimes outside of Europe. And equity is something a lot of people are interested in because equity does give a lot of favors, benefits to the owner on certain levels. So it's just like a kind of necessary way to go, and I think of course Germany will go there as well. They will look at Liechtenstein, how they do it, how they make it avant-gardistic, but it's just not happening right now. So Liechtenstein is now and the future is now.
That's a good point to pick up on here. I think I wasn't present yesterday, but I think one of the speakers that was here yesterday in one of his previous discussions made a point that you got to differentiate between products you as investors, we as investors are looking forward to investing to. And I think one of the most prominent examples is our cryptocurrencies such as Bitcoin. I think it's important to distinguish that from, especially on the legal side, on infrastructures, because it's a different setup. So if I talk about a crypto security, for example, under our Electronic Securities Act, it's actually not that exciting, to be perfectly honest, as a product for investors. So you could invest into a product which is not DLT native, you could invest in it, and it's more the product, the contents of the product, but the technology as such for investors is probably not that amazing. Where we stand in Germany is unfortunately, we don't have this one regime. There is certain provisions which apply to what we commonly refer to as crypto assets. If we had more time, I would urge you not to use the term crypto assets because it's legally bound. So what I'm saying here is that in Germany, we have a regime which is currently in place, which is pretty much a mixture of provisions which have been in place for a long time. And this is where the big bang, hopefully, is going to come in with MiCA. Probably, I know one of my colleagues has talked about the implications of MiCA, what it actually means. What it means, I think, for us is all those areas to date which are not regulated, hopefully, will be regulated by MiCA, which is supposed to come into force in 2023. End of 22, then we've got an 18-month transitional period, so we're really talking about 2024. So there's still a long way to go, but that's for crypto assets. As far as infrastructures are concerned, and that's where I'm going to stop, we already have another regime which will come into force next year in March, which is the DLT pilot regime. And that for me is the next step for infrastructure type of products, because you will be able, within a sandbox, admittedly, but I still think it's the right and next step forward to use certain products like your bonds, your corporate bonds, and picking up on what you just said, you can actually also have a sandbox for shares, and that's the missing piece. In Germany, we're currently waiting for shares to be put into these Electronic Securities Act so that we can actually level up with Liechtenstein.
Perfect, thank you.
Sorry,
You want
maybe
to
actually a question more, because in the end, maybe the technology enables the democratization or accessibility of certain financial products, but isn't it really the regulator who then in the end determines whether you're going to be able to invest into that? I mean, it's nice if you can tokenize a yacht or if you can tokenize private equity, but if you're still not permitted to invest into these types of securities, then you're not permitted to invest. And for me, it's a bit of a struggle to follow this argument of democratization of finance, maybe as a more controversial point.
Well, I'm happy to go first on this one. We're talking about the way certain assets are launched and issued. I mean, for shares, for example, of course, you can invest in shares. They exist already. We're talking about a share which is created digitally from the start, natively on a distributed ledger technology, which is a new technology. And I agree with you. Yes, to a certain extent, the regulator does have some impact on what's going to happen when. But I think a good example, lawyers always are the ones that are painting a rather dark picture, but trying to paint a rather bright picture is, if you look at the DLT pilot regime, you will see that, for example, retail investors can access marketplaces which they couldn't do today, just the way the setup is or has been. So in that regard, I think it is really a way forward, but I'm not saying that it will be all the way, and it will be an elaborate process. DLT pilot regime, most of you know, it's a regime which will be in place for the next 3 years. Then there's going to be a reassessment how the market has been doing. If the market has been doing anything with the DLT pilot regime, then we'll reassess, and then for another 3 years, hopefully broaden the scope of products or even who can invest in them.
Maybe if I can add something to it as well. Of course, there's two pieces. There's the technology, there's regulation. And I think the breakthrough through the technology to make this even possible is all clear to everyone, with all the advantages that have come with blockchain as well. I do believe, though, that since our regulators, also especially Germany, is really in the forefront of regulators on a global scale with our whole law system applied, and also with the EU, like the European Economic Area, which it also applies to, it's basically a regulated playing field to figure out what the future of finance is going to be. And I can definitely see a glimpse of what's going on, because we really tried, and it was a really hard way to get there, to really emit equity stocks and make it fungible, and also liquid as well. And what we can see is that our regulators already give us a lot of opportunities to really fulfill needs, to really create value and different approaches, and I think we just need to leverage them because the puzzle pieces are there.
I would add something too. So it's great to have Liechtenstein, because they are pioneering, they are heading the way we should actually do it in Germany. However, I could say that our investors would never invest into a Liechtenstein product, but they would invest into a German product, which is set up the same way actually, but they just need the German basis. And I'm talking about family office and high net worth individuals. Those are our investors. And we also were looking into Liechtenstein a few years ago, like 2018. And all our potential investors at this time said, no, we don't invest into Liechtenstein. Then we get the financial authorities checking us out too deep, too extremely. That's why we choose Germany to set up our fund and not Liechtenstein. But it's great what they are doing, and well, Germany should copy a lot of what they are doing.
I can maybe take this question from the Liechtenstein side. I think we try to tackle it in a really certain way, because we knew when we set up the whole like firm and company structure that we definitely want to have the target market Germany. That's not the question at all. So basically we build up our infrastructure, like the partners we use with all the also the law firms we use, Chancelleries, are all German in that sense. Of course, we have our Liechtenstein experts, which are a completely like crucial piece in our whole setup. But of course, we can like already prepare the market. We can prepare the product. We can prepare like everything around it. And I'm not sure why people are like that hesitant with Liechtenstein. Of course, it's like not that well known. I get it. But of course, we also passported our full prospectus to the BaFin, so they took a look. So. I think it's time to take opportunities. It's time to rethink and also get out of these old systems, the traditional systems, which didn't really are known for speed or innovation. So I really do believe that there's a high chance to leverage it right now.
Maybe to come back like more to the status quo right now. What market components are missing right now to have like the mass adoption? So maybe Jonas, you want to say something about that?
I wanted to come back to the topic of demand, actually,
Please.
which goes towards your topic of mass adoption. What do you need for it? Of course, from my perspective, I'm going to say you need the security. So you need safekeeping of the assets, because what defines this new asset class of cryptocurrencies? If it's gone, it's gone. So there is no doppelter Boden, there is no security line, there is no safety net. And I think when we're talking about making these asset classes available, it's important that we as an industry make sure that these assets that our investors hold are kept safe and kept safely. Look at something like Celsius and even the ripple effects it has in Germany, with Nuri and so on and so forth. So I think the safety of it and something like Celsius not happening, for sure not happening in the regulated space, but also not in the crypto space is key for us as an industry.
Yeah, I think the perception in public of the whole digital asset space is maybe needs to be solved. Like people need to be educated. There was an interesting article. Some stocks of the S&P 500 are more volatile than Bitcoin, or some UK bonds are more volatile than Bitcoin recently. But the public perceives digital assets as super risky. The whole ESG debate, I think, is I would have to see it critically. But I can understand the certain perspective on it. Maybe also your investors share this. Bitcoin not ESG friendly, proof of stake assets more ESG friendly. But yeah, I think education needs to be a key factor in making people access this asset class. From our perspective as Iconic, I mean, we build ETPs, so we have publicly traded debt obligations in the market. There's also a couple of competitors who do that, who are wildly successful. And right now, it looks like that this is a good vehicle to approach the market. Funds, I can't really judge it. But given that we can access retail investors, I think you have a minimum investment size that doesn't really drive mass adoption. But
isn't it like also a problem, because that what you said, like the lack of knowledge in that space? Isn't it really a risk for retail investors? So they cannot really assess what they're investing in, right?
Is the regulator going to tell you if you're allowed to invest into it or not?
No, that's not right. Fair point. No, but when we talk about that and making asset classes for retail investors accessible, I think we also need to talk about the risk, because there is a reason why some asset classes are just for institutional investors, right?
That's what a prospectus is there for, right?
Yeah,
we disclose risks. I mean, we have a Liechtenstein vehicle. It's passportable to the EU. Sorry.
Yes, there is you need to describe the risks and so on and so forth, but I see it more as an education thing, understanding these risks and what you get into. In the UK, I think they're pretty strict with advertising guidelines and so on and so forth, and I think for consumer protection, that's actually quite good. We all see what's happening with influencers and so on and so forth. So I don't think that's the right development. You shouldn't be jumping into crypto because somebody on TikTok tells you to buy into the latest thing, or they made 200 euros yesterday and you should invest into it. It's about understanding the fundamentals behind it. And I think something like Bitcoin is fairly well understood also by retail investors on the ETP market and that sort of thing. But what do you do with something new like Aptos launching now and so that's going to be a bit much to a retail investor, right?
I think it's like a two-sided coin basically we have here. It's on the one side, I absolutely agree with Dominic, it's an education question. Like what kind of need and urge does a retail user find to basically invest into digital assets? He won't even do it with stocks which are completely liquid and available already. So on the one side, we are here in a bubble which is completely educated. They know about blockchain, they know about solutions, but they don't outside. But here in this educated bubble, what are we looking for? We're looking for certain checkboxes to tick. So for instance, like we need to have an equity stock, we need to have it fungible, we need to have it regulated space, we need to have a prospectus, done. Okay, I can invest into it, I have a big load of cash doing it. On the other side, we have a retail user. He doesn't have that much money, he wants to invest. Like we also figured out, okay, he also needs to have like a small share price. Like we are basically brought a Colt and like a classic car, an old timer for 1650, like to the market, so per share. So it's something which they can basically buy. But the problem is, why would they buy it? Without the urge, like did they understand inflation, that money is going to lose its value to do something about it? Like when they actually figured out, I really need to invest my money to keep the value of it, then I think we have the reason why people will look for investments.
And maybe just to add to this, hopefully Mika is going to do a good job on aligning across Europe at least, especially on these type of assets. And I always want to come back to this. It's very important that what we're talking about here is really for those of us or friends that are looking to invest into something new and as an alternative to something which, remind ourselves, literally 3-4 months ago, there was no real alternative to investment. So that's why they became, the crypto sphere became really, really interesting. And hopefully this is going to change and also allow actually for market players to move across and do their offering like they do today with traditional financial instruments, to do that across Europe with less burden, some procedures in place. And I totally agree, even though I think it might not be called a prospectus, but even for the crypto assets, there is going to be a prospectus. I was just giving it a different name, so it sounds like all new. But at the end of the day, I think it's fairly standard. You have to educate the investors, and I think this holds true for pretty much everything that is currently going on, whether we're talking about the crypto assets that are regulated by MiCA, but I can say looking a lot of institutional investors and market infrastructures, the same holds true for market infrastructure providers to really understand where are we. And this is the biggest challenge we see in the market, that often when we talk to players in the market, regardless of size, when you ask them the one question, so what's the product, and they say, why do you need to know? The answer as a lawyer is, so I can tell you where you need to look, what you need to comply with. And yes, it's different to Liechtenstein. We do have a lot of different regulations, but it's manageable. And I think once you get to the bottom of it, which is actually not that difficult, then I think we are set up in a way that we can move ahead with a good infrastructure. And mind you that the infrastructure we're currently building is something that is going to be used in the future. And just from the session we had beforehand, is if you look at NFTs, they're probably going to be settled the same way as a security, the same way as a derivative if you use DLT technology. And that's the way it really should be. So there will be a lot of simplification in the market, which actually I have to say, quite looking forward to it, because there are a lot of synergies that are possible in the markets.
Perfect, thanks a lot. We have 5 minutes left, so I would love to close the round with one question to each of you. Like, in your opinion, what is the biggest challenge and the biggest opportunity for the use of blockchain technology to making asset classes accessible?
I think crypto and blockchain can bring about new asset classes that we never thought of before. Think of like NFTs and who thought about NFTs 2 years ago. And what we need to make sure is that these brand new ideas and brand new developments are actually bridged to the investor, and that the investor actually has an option to buy it, not only on unlicensed DeFi venues, but also in the safety of their home banking or whatever it is.
All right. So when you move an asset class to the blockchain, or when you use a technology, there has to be an advantage, a real advantage, why I move it. So I'm saving costs, or I'm saving time, or it's more transparent, or I can transfer much quicker something. So you need to really focus onto that. That's really important. And doing this should be as simple as possible. It should be really user-friendly. The best way is that the user doesn't know there's blockchain technology behind that. That would be the best thing, I imagine, transferring an asset class onto the blockchain. And well, the biggest opportunity is to make something non-fungible or not tradable or not liquid, more liquid. For example, funds or private equity or real estate, something I cannot invest right now as an individual or like a retail investor. Just make something more investable for everyone. This is something I'm looking forward, and I'm pretty sure that private equity and also like our fund will be purchasable for anyone at some point in time.
Yeah, like I said, I think a big challenge is going to be the perception in public, and maybe how the regulator approaches it. And opportunities, I think they're plentiful. One is number go up technology, but jokes aside, yeah, maybe having a lot of synergies and how the technology can be implemented in traditional capital market infrastructure, and make it easier, taking out middlemen, improving costs for the investor. So I think that's a big opportunity.
For me, personal-wise, I would say it's the term fairness which blockchain brings, like on many different levels. It does it on openness about the books, about non-human error. It does it about transparency. It does it about immutability. It does it about giving access to people which hadn't before. It's about showing situations how they're being done. It's also not taking out even hours where I can trade because it's 365 days, 24/7. So fairness in hand with a regulator you mentioned before. So basically, fairness is basically, for me, what blockchain is all about. It's about the openness, and I think this is something to leverage.
Okay, and maybe to finish off, the biggest challenge, I actually agree with what has been said before, is education. And for those who are already in this space, keep going. As I mentioned, especially on the DLT pilot regime, we are given like a 3-year probation period. If no one uses it, there is no necessity for anyone to make a further move. So, and educating those who don't believe into digitization of the capital markets, that I think and see as one of the biggest challenges. Opportunities is all the things we've heard before, synergies, creating something that hasn't been done before, like a real DVP, delivery versus payment, or delivery versus delivery. We haven't talked about cash at all on Ledger, but that's another element. And I think the third element in terms of the opportunities is we will see the market move in ways which we can't anticipate yet. Another element we haven't touched upon is smart legal contracts. If I digitize my contracts, combine them with smart legal technology, use a DLT, I will actually be able, just to give you one use case, to have near real-time collateralization of big portfolios of derivatives, securities lending transactions.
Couldn't agree more. Thanks a lot, everyone, for sharing your expertise with us. So that's it from our side. Exciting times ahead. So thank you.
Thank you for having us.